we've got to take a look at, Snehi. Of course, you do have a steady fourth quarter as far as United Breweries is concerned.
Numbers looking rather steady when it comes to UBL, and it looks like a good set of numbers as well. Let's interact with Vivek Gupta, MD and CEO at United Breweries. Before we do that, let's just take a look at what the stock is up to. Rather flat, but sir, thanks so much for joining us, and let's focus on your financials for the quarter gone by. You've reported 9% revenue growth and 5% volume growth year on year in the quarter gone by. Will the trend strengthen further going ahead, and will double-digit revenue growth be a fair estimate for FY26?
We are in a very difficult situation, and we salute our armed forces helping protect our nation. Yes, we had a very strong first quarter with a 9% revenue growth. We have plans to continue this double-digit revenue growth and drive volume growth to 6 to 7%. Of course, a lot of the geopolitical situation, we have not considered those impact, and it is very, very recent. But based on our current plans, based on the premiumization on which we are driving our business, we believe that we should be able to continue this momentum.
Mr. Gupta, this is Shreyansi as well joining in the conversation. I also wanted to talk to you about how you've hinted at short-term pressure when it comes to margins as you continue to face challenges when it comes to the glass bottle supply. In fact, analysts are also modeling a EBITDA margin of 11 to 12% when it comes to financial year 26. So would this estimate be fair according to you, or could the margins be in single digits when it comes to financial year 26?
We will see, as I said, our priority is to be the category maker, which means we really want to drive top line growth and the revenue growth. Beer business is also high capex business, so it is very important to build scale on this business going basis. We have committing a gradual margin expansion, but our first priority will be to investment in the growth. And we are investing in capital expansion. We are investing in cold beer. We are investing in repair maintenance of our breweries. We are also investing in premiumization, because as you know, when we actually launch a new brand or when we expand our premium brands, we put a lot more new bottles in the market, which has a downward impact on margins. The other thing we have to be very conscious of is the whole tariff situation, which has an impact on the import prices of certain things like aluminum cans and all. So we are actually monitoring this situation, but our goal is to drive double-digit revenue growth, be a category maker with 6 to 7% volume growth, and at the same time, gradually we want to, and sequentially we want to improve our margins, which we have also done last year. If you see, our margins have gone up by 44 basis points when our revenue has grown double digits. So there is a formula where it can happen.
Okay, and on that one, let's also take a look at your pricing strategy. You've undertaken a price hike of 15% in Telangana in Q4. Help us understand if it has been fully absorbed, and also if we could see similar price hikes in the future as well.
See, as you see, Telangana price increase happened from mid-February, and we are monitoring that because the consumer price increase was higher than the cost price increase which was given to us because of the duty increases. We continue to work with the government to drive a plan which can increase revenue or the category growth for them, but at the same time make our business sustainable. So, we will continue to work on that. Have we got everything what we need? The answer is no. But are we investing in Telangana? The answer is yes.
Point taken, Mr. Gupta. Talk to us about your growth roadmap also when it comes to Telangana as well as Karnataka, because there are some concerns that were there in both of these states that you faced in the fourth quarter. Do you think those are behind us now?
See, in Karnataka, we didn't have a UB specific challenge. It was an industry transition when the government went through a label process change in January, where most of the industry or beer category got impacted. I think that is behind us. However, affordability of beer is continue to be our concern in Karnataka because of the excise duty increases. The category is down double digit. So we had made representation through Brewer Association of India to the state of Karnataka to make sure the category remains sustainable growth and category remains viable. So we have to monitor that, but operationally we don't have any challenge in Karnataka. And in Telangana, as I said, we had suspended the operations in January because of the pricing as well as the payment issues. But I think that is also behind us, and our operations are running smoothly in both the states now.
Okay, and also want to understand something on the bookkeeping front. At the end of Q4, you had highlighted that around 600 crores was still receivable from Telangana Corporation back then. Has that been cleared now? Just want to get a clarification on this.
Not really. We are in a similar situation, but you have to also take into account there has been improvement in that situation. But with the season, the working capital requirement increase, and we are also continuously working with the government to ensure that we get regular payments.
All right, Mr. Gupta, just to scratch that point further, can you quantify that for us? How much of it is still receivable at this point in time?
We have I don't have the recent number, but it is slightly lower than what it was a couple of months back.
All right, and in fact, you've also been working with several states when it comes to increasing prices. How have those talks progressed? Then tell us a little more about that as well, and possibility of those talks also fructifying when it comes to anytime soon. What do you make of the roadmap there as well?
See, we are actually working with a lot of states on two areas. One is really providing them that the tax rationalization of beer, because as you know, in most of these states, beer is taxed higher on per alcohol basis versus spirits. So there is a rationalization need on taxation to continuously drive affordability of beer for the consumer, and that is one area through Brewers Association of India we are consistently representing to the states. We are also looking at where the our cost price has not been increased despite the inflation over last few years. That part also we have worked with few states. So we are making a representation in few states. We have taken a cost price increase, but at the same time we are also very conscious that on affordability for the consumer. So that's why, for example, in Karnataka, when the duty increase happened in the last round, we did not take price increase on Kingfisher brand because we wanted that our mainstream brand to remain affordable. And I want to thank consumers who have actually helped us to grow shares there. But we will not be able to continue doing it if the duty increase will keep happening. So that's where we are on that.
Okay, on that note, Mr. Gupta, we'll let you go. Thanks so much for joining us. So that was the management of UBL joining us and sharing their earnings fine print with us for the quarter gone by.
If you like this video, then like, share and subscribe to ET Now.